Okay. Okay, so welcome back to another what was supposed to be a Sunday night market outlook webinar, but we had a short day today. It was President's Day in the US, Family Day here in Canada, and maybe some other days across the world. But we had a half day here in the market today. I did not trade. I said I was not trading. I typically don't like to trade these half days, so we'll do our Sunday night market outlook webinar today, which is on Monday. And what I want to do is I want to start with this here. Now, we're going to do this one a little bit different, and you guys let me know if you guys like this versus what we've done in the old Sunday night webinars. I'm just trying to progress this a little bit and give you guys some more information here. So definitely open to feedback after this one. But what I've started with here is a chart here. So this is an ES chart for the week. This is the previous week here. So we've got the 14th back here hold on, let me just mute a few people in here. You guys should be able to unmute yourselves after. Okay, there we go. So what I've got here is a chart. This is ES, the past 1, 2, 3, 4, 5 trading days here, including today, which we're not going to look at very much. So what I have at the bottom is open versus close price, what percent the market moves. So we're down, 0.24% here, up 0.52% here, 6.2, et cetera, et cetera. So this is what we've moved on ES every day this week. Now, one of the big things here to recognize is, or to look at, is the top of this chart right here. What I have is economic events. So this comes off directly off the economic calendar. Now these are events that could increase volatility in the market, like retail sales, FOMC talks. There's different speakers that are speaking throughout the week from the FOMC. If we have any, PPI or any events that come out during the week, these are things that could influence the market. So what I want to start doing is looking at the outlook for next week as well as what happened last week and how these events affected the market. So a few of the events that we had last week here, this was on Tuesday. There was nothing on Monday. It was pretty dead. But on Tuesday here, we had the core PPI. And I've put some definitions here on the right side of the chart. So the PPI is the Produce Price Index. And we'll read through these definitions after, but I wanted to put these up here for you guys just so you could see them. And this is when Biden was on the mic here. I believe he's on the mic around 3 o'clock, something like that, just after 3:30. This was on this day. What I've also done with these charts is I've also plotted in the different market open or market time frames here from New York, London, and Tokyo. So why I did this is because I wanted to show you guys when the market opens, especially in London here. So we look at London, which are these blue boxes. We can see the impact that the London Open here has on the market, okay? For the most part, every single day London opened, the market had a really, really good move, one way or another, up or down, right? So it just shows us how much liquidity is coming into the market directly from the London Open. And maybe you guys knew, maybe some of you guys didn't know, but when you wake up in the morning and you look at your ES chart and it closed here and it opened here, well, this is why, right? It's our London session here that opened, and there's people across the seas, or for some of you guys, maybe you guys are living in the London area, the UK area, they're trading market opens, market floods with volatility, and those are the reasons for those moves. But I thought it was interesting just to see the difference between the market we typically trade is the New York market here, or New York time zone in this market, and the London, Tokyo markets. Tokyo doesn't seem to have a major impact on the market. There are some moves here as we get into the Tokyo time, but these are the 3 different market contrasts here. So this week right here on ES, or the past week, we were down 1.55%, year to date down 8.8%. Now, this is a good dive for the market here, down 8.8% on the year. I would say once we get into the 10-15% down on the market, not that we have to be concerned, but this is when we start rolling into that bearish sort of territory, right? Where the market's pulling back, 15+%, and we're creating a lot of supply overhead and breaking through demand levels below. This is where we start looking for the market to push down and possibly continue down for, it could be a week, 2 weeks, a month. Who knows? We just like to enter into the market, see what we see, and play what's in front of our face. Another thing I've plotted on this chart for you guys here is this orange squiggly line. So that orange squiggly line here is that's the NQ. So we're comparing ES to the NQ here. Now, one thing I did notice is if I take this chart and I drag it over here, so I've dragged this chart over here, so the open of ES right here is right at the start of the chart. NQ actually gave more range last week, range by percent, okay? It's always going to give more range by dollar because, well, it's, 3 times the price of ES. But if I take my crosshair here and I show you guys, this is the open price of the market here, pretty much both ES and NQ. This would be the high of NQ, the high of ES. And if we sort of don't pay attention to today's price action, this would be the low of NQ right here, and the low of ES would be somewhere in here. So if you guys look on the right side, I believe it'll show up on the right side. When I hover my little crosshair over here, we've got 2.74% on NQ, so we had a 2.74% move to the upside. And to the downside, we had a minus 3.13% move on NQ to the downside. We compare that to ES, and ES went 1.84 up, and it went 2.4 down. So on each side, top and bottom, we almost had an additional full percent on NQ there versus ES, which I thought was interesting when doing this comparison on the chart here. So we'll get into some definitions here. What does PPI mean? I took these directly from Google to keep it super simple. So the producer price index is a family of indexes that measures the average change over time in selling prices received by domestic producers of goods and services. Okay, so this is going to be like balance of the economy right here. Money in, money out. Jobless claims definition. So jobless claims are a statistic reported weekly by the U.S. Department of Labor that counts people filing to receive unemployment insurance benefits. Okay, what is the difference between jobless and unemployed? Jobless is lack of employment, while unemployed is having no profession despite being able to work. Okay, why am I bringing these up? Well, if we're gonna look at the market outlook for the week ahead, these are some of the things that could be posted in the economic calendar, and it's more important to know the amount of volatility that it could employ in the market and the times that these conversations or papers or numbers are going to be pushed forward. So if we have jobless claims are usually 8:30, but if we have like an FOMC meeting minutes coming in at 10 o'clock, 2 o'clock, whatever it is, it's good to know whether you're in a position or not in a position. It's good to know that something's going to happen. I know there's been times when we don't look at this, and we've all been trading the market months or years ago, whatever it is, and you're in a trade and all of a sudden the trade just starts flying or it starts tanking on you. What the heck happened? Well, a lot of the times if it's market related, it's due to something on the economic calendar. So why not prepare ourselves for what could happen in the upcoming week, right? Rather than just going into it blind. So what does FOMC mean in stocks here? The Board of Governors of the Federal Reserve System is responsible for the discount rate and reserve requirements, and the Federal Open Market Committee is responsible for open market operations. So the FOMC is going to be directly related to turning the screw on the market, right? So they're everything in, everything out is essentially FOMC here. This is just a little snippet from the economic calendar here. This is on the retail sales here at 8:30. So it's essentially just going to gauge, the value of sales or retail sales across the country. It's an important indicator of consumer spending, accounting for the majority of the overall economic activity. So essentially, more people spending equals, a more prosperous economy, right? If everyone's sitting on their money, well, then there's no retail turnover, and that usually leads to a worse economy, essentially, right? No money going into the economy means no moving forward, no production, et cetera, et cetera. So this is what we have here for last week, and what we have for the upcoming week. An important event going on right now is this whole Russia-Ukraine thing going on, and I think this is going to heavily weight the market in this coming week. Putin will have a lot of influence on the market. Now, do we play our trades around what someone's going to say or what they could possibly say? No, but it's good to know sort of high level what's going on in the world. I don't expect you to know, where the Russian soldiers are and, if they're moving in and this and that and following all these macro events. But it's good to know that this is you know, a big bubble hovering over the market's head right now, and the market could and will be influenced by exactly what is going on overseas right now. So Monday, like I said, today was President's Day, early close. Tuesday, we've got consumer confidence. It'll measure the level of confidence consumers have in the economy. This is at 10:30. So optimism equals consumers spend more, increasing consumption, overall growth in the economy, which is a good thing. If people are getting their paychecks and sitting on them and not spending anything, and they're just keeping liquid cash or cash in a bank account, there's no injection back into the economy, so no prosperous growth going forward. Thursday jobless claims 8:30, and there's a tentative Fed monetary policy report possibly coming out later in the week. I don't even know what this is about really, or how it could influence the market. So when I looked at the economic calendar here, and I'll pull it up for you guys, when I had a look at this, it looked like a pretty thin week compared to previous weeks. This is really all I have here. And this is Bloomberg.com. And what I've done here, I've gone through the filters, and I pretty much just filter all the US or the United States news. And then I filter by importance, right? So I want to know the most important things going on. This will typically create the most volatility in the market for the coming week. If I fill all of these guys out to get all of the news, you know, then we have a bunch of stuff that is not as impactful on the market, which we really don't care about. Then we're just doing a lot of sifting through. So if you're going to use Bloomberg or any other site to get, you know, the economic calendar, there's probably a filter on it, and you could just filter out some of the most important stuff here. And we can see this is a relatively light week here going forward. So with that being said, what we'll do is we'll get rid of this chart here, and I'll jump over to our ES chart, and we'll go through some S&D stuff. So let's have a look at this and remove some of the stuff from last week. We'll remove some key levels, some trap zones that we have plotted in. I still like that trend. That's decent. Okay, so as we can see, since ES broke this big ascending wedge, this pressure cooking wedge right here, we've held under it, right? We've essentially held under this wedge, and we're continuing to make supply overhead. And as you guys know, we look at the market back from last week, and ES was just slaughtering all these demand zones. It get into demand, hold it for a little bit, and then just fall into the next demand, hold it, fall into that, and it would just constantly create supply overhead. So really, we can still play this market both long and short. We just have to be conscious of what the overall big picture is on the market, and that over the past week or 2 weeks, it's been getting really beat up, right? There was some recovery in the market here, and we sort of plateaued, and sellers took this back to the downside. If we start breaking pivot lows like this here on ES, which is, you know, around 42.10, we can really see a move here to the downside. That will bring our percent loss on the overall market likely above minus 10%, somewhere in this area. So that's really turning the market over for sort of bearish territory. So what I'll do here is I don't see anything on the daily for supply. I do see a nice daily supply zone right here off this candle. And what I might do, actually, I'm going to leave those smaller guys. No, I lied. I second guess myself. I'm going to delete these guys right here, and I'm going to drop some supply right off this candle. I do like that bigger picture daily supply, so I will make that our supply zone. I will also drop the front of our level in here. Bear with me, and we'll go daily. We'll make this our red top. Okay, so we've got a big daily supply here. This is a thick area here for ES. There's a ton of supply in this area. This was, you know, a couple drop-based drops on smaller time frames, 45-minute, 2-hour, 15-minute, etc. And then we got this big daily pullback supply zone. So ES back into this area. I would say this is really nice for targets this week. Don't expect ES to go from here to here in one day. But if we do start sort of trending up and we're building demand zones in these higher lows, then we can expect this to be some sort of target for possibly another move to the downside. Overall, this big picture here is looking like it's going to get pretty pressure cookie if we hold sort of these areas. We could possibly get into some consolidation here, pressure cook, and ideally for me, we break this this downtrend right here, which gives us a really nice push, probably back into all-time highs. Let's get down to the 4 hour here. So we've got some smaller stuff, 2 hour 15. Let's get rid of this 15-minute because it was broken here. It was wick through there last week. I do like this here for a 4 hour. I hope there's something smaller. If there's not, I'm gonna find or I'll mark this 4 hour zone right here. Let's drop down into the 3 hour. Okay, let's mark this 3 hour sort of inverted hammer looking pattern. And if we find something smaller than this, you guys know I always like to go for the smallest zone, or if there's a zone within the zone, I will definitely mark those and put more weight on a deeper push into those zones there. Now we got a 2 hour, nothing here on the 2 hour, nothing new. This 2 hour zone was a really nice, so here we go, we dropped, we based, we pushed up, we based out, and then we had a nice drop. So we had that 2 hour zone right here, and this is a really thin zone that I like because it's either going to hold it or it's not. And this is what I really like about these small zones. The perfect zone is a thin zone on a larger time frame, right? So skinnier, larger time frame. If you have like look at, for example, this 1 hour zone is 2 or 3 times the size of this 2 hour zone, and it's on half the time frame. So I would definitely put more weight on this 2 hour because we will know if it's going to hold right away. We don't have to wait for something like this 3 hour zone where price could go in, do this, fart around, and then drop, right? This 2 hour zone, there's not much space for it to chop sideways or consolidate sideways. These are the zones it typically pops up to. Bang, hits it and reverses, or we pop up and go right through like no one was even home. So we get the answers right away on these zones, which I really like. Let's drop down to the 1 hour here. I don't see anything super interesting on the 1 hour. All of our previous zones are still valid. This right here, we have a nice drop. This right here, we have a nice drop. Nice drop here. We could be building demand in the overnight session, demand inside of demand, even though we're sitting in a demand zone right now. This is also really thick, and it's super tough to play. So depending on how price irons itself out here overnight, this could be a possible 1 hour zone or maybe even a smaller zone. If the market does this, market opens tomorrow, we could flush back into those lows and then go for a push into this 3 hour. That's at least what I'm seeing here, and I'm not trying to forecast what's going to happen, but we do want to have those what if scenarios in our head. I do like this 90-minute DBD here. We'll definitely mark this guy. If you guys don't understand how or why I'm marking my zones, you guys can definitely open up the mics. So that's a 90-minute zone here. That's really nice. Drop base drop on the 90-minute. Go down to the 45. All these zones still look really valid. 30-minute. I don't see anything I really love. Maybe a 30-minute up here. We'll mark this just for fun and see if price pays attention to this at all. This was a valid drop base drop, so we could break that 90-minute and see the 30-minute for a move to the downside. I'll save the 15-minute for the morning. Once I revamp our plan here, or revamp my plan going into the market for this week, tomorrow morning, I'll make some adjustments on these zones. I'll add a few 15-minute zones if there are relevant or valid 15-minute zones, and then we'll go from there. But as you guys can see, we didn't mark any demand zones. We marked 0 demand zones, and we put in 3 or 4 supply zones. So this has sort of been the pattern for the past few weeks, is we're removing demand and adding supply physically on our charts, taking green boxes off and adding red boxes to our chart. It should tell us that sellers are pushing the market down, right? Sellers are willing to step down and bids are bidding lower, which is causing the market to move down over these past few weeks. I don't have much more to say about the market. We're still really just going sideways. We got a slow week on the economic calendar going ahead, so I don't want to pay too much attention to that. I would say keep in mind that Russia, you know, the war stuff in Russia that's going on, a lot of this stuff could happen overnight, and they can make overnight moves on this into the London market. That's a more convenient time zone for them to do it on, but it could still influence us in that New York time zone market. So we'll definitely pay attention to anything going on with that. And what I'm going to do here is I'm gonna end the recording here, so we can upload it, and then I'll open this up for any questions that you guys might have. So let me chop this recording here.